Central banks and inflation. So as I said off the top of the show, this is the number one idea, the number one thing investors and analysts and economists are talking about as of late. Will the Bank of Canada lower rates again coming up at their next meeting next week? If so, by how much? 25 points, 50 basis points. Will they go another 50 after that, or just a quarter? What about the Federal Reserve? For a while there, we were talking about Federal Reserve being behind the curve, not raising fast enough. Now, all of a sudden, we're talking about a strong U.S. economy. Will the Federal Reserve cut rates again this year? Will they go once? They have two meetings before the end of the year. Will they cut 25 basis points? Will they cut 50 basis points? A lot of the questions that need to be answered. And these are the main, or interest rates, in my opinion, is the main thing that affects markets, right? If we knew, if the Fed and the Bank of Canada were to come out and say, on such and such date, we're going to cut 25 basis points, well, the market would be in much better shape. We would know in advance of what's going on, but we all know that's not what happens. Central banks say they are data dependent. So what do? As investors, we look at the data. But what if the data is mixed? And that's what we have currently. Some data is strong, some data is weak, some data should be coming down faster, like inflation, not enough. And in the case of living in Canada, perhaps inflation coming down too far. You know, a 2% target is what the Bank of Canada and the Fed talk about. Well, last reading here in Canada, 1.6% was our inflation rate, CPI in Canada. So is that too much? So all the data coming in has been mixed. And we have a number of charts I want to get to that will show you what is happening with all this data. But what I will say before we get to the charts is, in my opinion, I think you have to go with the standard. And what the standard to me is quarter point cut in Canada, quarter point cut in the US. If they cut 50 in Canada, I think that is bonus. If they don't cut in the US, well, that I think can perhaps ruffle the feathers of the stock market. The hope is that they will cut again, a quarter point at least. But keep in mind, right? TSX and even the markets in the US, they're at all-time highs. So these central banks will be cutting interest rates when markets are at all-time highs, something that we don't see often. I think the last time we saw that central banks cutting rates when markets were doing extremely well or at highs was back in the 90s. So it's been a long time that we saw central banks cut rates while markets have been at all-time highs. So let's move to our first chart, which is the Canada's inflation rate for September. And we'll show very quickly that, yes, there it is, easing to 1.6%. You can see the Bank of Canada rate, 4.25%. Most banks thought, most main or large banks in Canada thought that we would see 4% by the end of the year, which means a quarter point cut, perhaps this meeting or their last meeting of the year. Now we're hearing maybe 2 quarter point cuts, so maybe 3.75 bank rate before the end of the year. But you can clearly see that with an inflation rate at 1.6%, which is well below the 2% target, Bank of Canada has a lot of leeway into cutting rates further. And when you compare the bank rate with the inflation rate, wow, it's almost 3 times the actual inflation rate, way too high for many individual investors and analysts. Going to our next chart, we'll show US CPI, which is the US inflation rate. You can see here that the headline rate is 2.4%, also coming down significantly. Core rate, 3.3%. That too is coming down. Obviously, the Fed still wants to get to 2%. And the question is, will they get to 2% anytime soon? Well, with the trajectory that the inflation rate has been taking, I think they will. I don't know about core, but it'd be nice to see core somewhere around 2.5 with the headline number at 2%. So inflation definitely moving in the right direction. And that is definitely a cause, or at least something that the central banks can use to say, okay, now it's time to cut rates further. So validation, if you will, for interest rate cuts. In the US, our next chart, PCE, we talk about that all the time, another measurement for inflation. And you can see here, core PCE, 2.7%, which is excluding volatile food and energy, and the headline number, 2.2%. So if you were to ask Jerome Powell, the head of the Fed, I'm sure he would tell you that inflation is hovering around 2 to 2.5% currently. Going forward, jobs. Now, this is something that causes us to have a bit of a I guess, pause here with respect to interest rate cuts because jobs have been strong the last couple of months. Our first chart here, Canadian job creation for the month of September, almost 47,000 jobs created, well above the 22,000 jobs that the market or that analysts were anticipating. We also saw a lot of good job growth for the month of August. Prior to that, June and July, obviously, we saw negative jobs creation. So definitely a rebound in jobs. Again, will the Bank of Canada take that into consideration? Economy is doing a little bit better. We're seeing better growth numbers, GDP and jobs. So that might mean maybe the Bank of Canada can continue to cut rates, but more at a more measured pace. So don't have to make these big jumbo cuts, as the rumor going around is talking about for next week. Maybe they just go slowly, gradually, which I would say, in my opinion, would be probably the better move. Our next chart here is U.S. job creation. And again, 254,000 jobs created for the month of September. And you could see from probably around March to about, I'd call it June, a nice gradual downward trend in job creation. Now, all of a sudden, if you go from June to September, it's now gradually working its way back up. Once again, showing the resiliency of the U.S. economy and showing how strong things are, how good growth is. Jobs, a great measurement for the Fed. And if he starts to see jobs fall, which they were seeing for a short period of time, they talked about cutting rates because, as we know, there's a dual mandate that the Fed and Bank of Canada have. They want full employment and they want price stability. Price stability seems to be already happened. Inflation's coming down. Job growth was coming down, but now that's come up. And that's why you're hearing a lot about the soft landing or no landing scenario, meaning the economy is just doing fine. The Fed was able to do what they needed to do to bring inflation down, and the economy is still humming along. The next chart we have here, Canadian unemployment rate actually ticked down a little bit to 6.5% in September. If you look to the far right, very slightly a tick down, but you can see that it had been moving higher, as high as 6.6% over the past few months. We go now to the U.S. unemployment rate, again showing you, I guess, a bit of a fall in unemployment from 4.2-ish to 4.1%. Again, telling us that the whole situation regarding jobs creation, and even growth is definitely doing a lot better in the U.S., doing a lot better in the U.S. than here in Canada. But even in Canada, we're seeing some positive data. A couple of more charts we have here. Bank of Canada cuts for the third time. We saw 3 cuts already by the Bank of Canada. You can see it there, 4.25%. Will they cut a 4th and 5th time, bringing the rate down to perhaps 3.75 if they go 25 basis points? That is the question we're all asking. And our last chart, last but not least, Federal Reserve. They've cut once, but it's 50 basis points, half a point cut. And you can see there the trajectory for cuts going forward. So all in all, I guess after all these charts, I guess my main message is this. What we're seeing is mixed. We're seeing strong data. We're seeing strong data in jobs, GDP growth. I think they're talking about a 3% growth rate for the current quarter in the United States. Very high. We're seeing weakness in some things. And so when you combine the two types of signals that we're getting out of the data, it's mixed. And that is why a lot of individual investors and analysts are having a difficult time figuring out whether banks are going to cut, central banks will cut, by how much and how quickly. And I guess we're going to find out in about a week's time what the Bank of Canada will do. And then early on in November, I believe just after the election, we'll find out what the Fed does. But for now, I think any signals by either central bank will be key for how the market will perform over the next, let's call it, month or so.